PantheonAI presents Microsoft's AI power move, Pfizer's $6 billion cancer bet, Tesla rallies, Google I/O 2025. Welcome to the PAI Morning Briefing. I'm your host, and today is May 20th, 2025.
And I'm your co-host. Let's dive right into what's been happening in the markets and around the world, shall we?
Absolutely. Starting with a quick market overview, the broad U.S. indexes are still setting the tone for the day.
Right. The S&P 500 is sitting at roughly 5,948, showing a modest gain of about 0.05%. So pretty flat there.
Yeah, just barely ticking up. In contrast, the Dow Jones is trading a bit lower at approximately 42,685 points, down by around negative 0.12%. A little dip for the Dow.
But the Nasdaq's livelier, isn't it? Almost 19,175 points, up approximately 0.22%. And the Russell 2000 is holding near 2,105, climbing by about 0.18%.
So tech and small caps showing a bit more energy today.
Definitely. Now, turning to crypto, Bitcoin is trading at roughly $105,231, experiencing a slight decline of about negative 0.37%.
And Ethereum? It's taking a bit more of a hit, right? Around $2,476, but down by approximately negative 2.1%.
Yeah, a bigger drop there. It's interesting how the digital asset world always manages to keep its own wheel of volatility turning, no matter how much we try to predict it.
It really does. So let's talk about those broader market trends then. What are you seeing?
Well, the overall sentiment seems to be this tug of war between cautious optimism and guarded risk.
A tug of war, I like that. So even though the major indexes are posting relatively flat changes, there's this underlying energy.
Exactly. It's fueled by sector-specific news and geopolitical developments that are reshaping risk preferences. Technology, for instance, is really at the forefront.
AI, I'm guessing?
Precisely. With the proliferation of artificial intelligence and robust earnings reports from tech giants, there seems to be almost a magnetic pull towards innovation and growth prospects, even if traditional markers like the Dow are dragging slightly behind.
That makes sense. So tech is leading the charge, but what about other sectors?
Well, energy and finance are navigating choppier waters. Global refinements and strategic moves from industry leaders have investors keeping one eye on potential geopolitical impacts.
Right, that global uncertainty always plays a role.
It does. This curious dance between confidence in growth and the caution of real-world challenges is something we've seen time and again. It really sets the stage for a complex interplay in investor decision-making.
Absolutely. It's a reminder that while numbers on the screen tell one part of the story, behind every figure is a host of factors, from international supply chains to domestic political dynamics that subtly influence market behavior.
Couldn't agree more. Okay, let's get into some of today's most talked about stories.
First up, we have a fascinating analysis titled How Microsoft Can Make Real Money Off Its AI Investments and Break Away from OpenAI.
Oh, that sounds interesting. Microsoft's been making some big AI moves, haven't they?
They really have. They recently announced an array of new tools that empower companies to develop their Nunai's proprietary AI services. Analysts are really impressed with their clear-eyed view on leveraging their entrenched business model to capitalize on the burgeoning AI sector.
So they're not just riding the wave, they're actively sculpting it, as the article puts it.
Exactly. It's a compelling story about a giant awakening to its own potential. Kind of like watching a seasoned wrestler go from a corner seat to center stage, ready to redefine what's possible.
That's a great analogy. Okay, what's next?
Next, we encounter an article titled It Kills Jobs, and 4 other huge mistakes you're making about the AI revolution.
So this takes a slightly contrarian view on the whole AI debate.
Yes, it challenges those assumptions head-on. While many pundits warn that AI will replace human labor entirely, this piece argues that rather than being the harbinger of job destruction, AI is laying the foundation for the next wave of innovation and opportunities.
So it pushes us to rethink our preconceptions. Is AI a threat or a catalyst for a renaissance in how we work?
Right. The story concludes that, perhaps, like any major technological leap in history, adaptation might just outweigh the initial disruptions.
That's a much more hopeful perspective. Moving on, let's look at healthcare.
Pfizer has made headlines by entering the race for a new cancer drug with a hefty $6 billion licensing deal with a company based in China.
$6 billion? That's a massive move, especially just 6 months after rival Merck made a foray into the cancer treatment market with a significantly smaller financial commitment.
Exactly. Pfizer's aggressive push underlines the urgency and competitive spirit in the biotechnology field. It hints at the colossal battles being waged behind the scenes in the pharmaceutical industry.
The potential for breakthroughs is massive, but so is the competition.
Definitely. On the automotive front, we turn our attention to Tesla.
Tesla shares ticked higher recently, didn't they? Even when the S&P 500 was showing slight dips.
They did, nearly 2%. And CEO Elon Musk recently made headlines by stating he intends to reduce his political spending significantly.
Oh, that's interesting. Positioning it as part of a broader strategy to ensure Tesla sales continue an upward trajectory?
Precisely. It seems to resonate well with investors, underscoring a concentrated focus on the company's core business and innovative potential. Tesla remains a bellwether for tech-driven automakers.
It really does show their ability to remain agile. Okay, shifting gears to economic policy. There's a deep dive on the GOP tax bill.
Right, titled, Trump's $1.6 trillion spin. What the numbers really say about GOP tax bill.
So the White House claimed the tax reform would yield savings of $1.6 trillion, but that's come under scrutiny?
Yes, analysts contend that figure only tells part of the story. Certain spending cuts and broader shifts in fiscal policy weren't fully accounted for, suggesting the impact may be more nuanced than the public narrative implies.
So for those monitoring fiscal policies, it underscores the importance of peeling back the layers and looking at the comprehensive picture.
Exactly. Now turning our focus to emerging markets, an insightful piece from Wells Fargo has been making waves.
Why Wells Fargo expects the emerging markets outperformance to reverse.
Despite emerging markets outperforming the S&P 500 by a considerable margin this year, Wells Fargo's latest report warns that this trend might not be sustainable indefinitely.
Analyst Austin Pickle outlines reasons why that relative strength might be temporary, so a reminder for investors to remain adaptive and cautious there.
Definitely, especially as global economic priorities evolve. In another noteworthy development, Stonepeak's portfolio company, Textainer, is set to acquire Siaco.
The container leasing deal. An equity purchase price of approximately $1.75 billion, right?
That's the number. It's described as a strategic play that will reshape the landscape of global container leasing. Expected to yield long-term benefits by consolidating market share and leveraging synergies.
The implications on logistics and trade will certainly reverberate through the supply chain. Underscores the importance of strategic consolidation in capital-intensive markets.
It really does. Now, in the steel industry, news reports indicate U.S. Steel is trading slightly lower amid ongoing reviews related to CFI-US, the Committee on Foreign Investment in the United States.
Right, that hints at the careful scrutiny they're under, especially with national security concerns and cross-border investments being watched so closely now.
It's a good reminder that even established sectors like heavy industry aren't insulated from the complexities of global trade and regulatory oversight.
True. Shifting gears to consumer retail, Victoria's Secret has been busy countering activist investor maneuvers.
The poison pill strategy. In response to moves by an activist shareholder from Australia, Blundy, who recently switched their holding from passive to active.
Right, designed to prevent any single investor from amassing a controlling stake and potentially disrupting the company's long-term strategy. High-stakes chess match there.
Definitely. A testament to preserving strategic vision amidst external pressures. And finally, a sobering look at personal finance.
This is how Americans are blowing their retirement money. Again.
Yeah, cautionary tale. Offers a sobering look at how individuals are mismanaging savings, often chasing fleeting trends or underestimating long-term planning.
Reinforcing that smart, informed financial planning is paramount in today's rapidly shifting economic landscape.
Absolutely. So with that comprehensive roundup, let's pivot to a detailed sector analysis.
Okay, starting with tech. It's clear how companies like Microsoft are leading the charge in AI innovation.
Their newly launched tools really show that while, quote, disruption might be overused, it truly encapsulates technology's potential to reshape industries rapidly. Microsoft's ability to leverage its deep expertise makes it a formidable competitor. Good point. How about energy?
Although the headlines aren't screaming revolution like tech, the undercurrents are significant. With global supply factors in flux and long-term policies being revised, investors are navigating a sector fraught with both uncertainty and opportunity.
So some are capitalizing on increased production capacity, while others are pivoting towards renewables?
Exactly. This balancing act makes energy one of the most interesting sectors to watch as governments worldwide strive to meet climate targets while also addressing immediate supply chain challenges.
That's a complex challenge. And finance?
The U.S. tax bill analysis and emerging market trends remind us that fiscal policy and market confidence remain deeply interconnected. The shifting focus on tax cuts, spending adjustments, and macroeconomic policies means traditional institutions need to be nimble.
So they're not just profit centers, they're key barometers for understanding broader economic shifts?
Precisely. Coupled with geopolitical factors and domestic policy changes, the financial sector is essentially the canary in the coal mine when it comes to economic trends.
Fascinating. Now, looking at the global stage, market watchers are really focusing on the interplay of domestic policy, cross-border investments, and regional economic health.
Like Pfizer's bold move into the cancer drug race, that's not just about one company. It signals the competitive spirit in global healthcare innovation.
Exactly, and the Textainer acquisition reminds us how globalization continues to shape even niche sectors like container leasing.
Meanwhile, shifts within American companies, whether it's U.S. Steel's cautious recalibration or strategic governance moves at Victoria's Secret, show a world where localized decisions have far-reaching global implications.
So what does all this mean for investors and traders?
Quite simply, it reinforces the need to stay diversified, remain vigilant, and constantly seek out reliable information.
Given the interplay between macro data, tech and healthcare trends, and unpredictable global politics, are we just seeing the ebb and flow or a new paradigm shift?
Maybe it's a combination of both. It can feel both exhilarating and nerve-wracking to navigate these waters, a bit like trying to solve a Rubik's Cube blindfolded while riding a unicycle.
That's a perfect analogy. But that's what makes finance so endlessly fascinating, right?
It is. A key takeaway here is that while today's market numbers may seem modest, the underlying stories carry significant potential for long-term transformation.
Whether it's tech juggernauts pushing AI, healthcare giants investing billions, or financial institutions grappling with new realities, each sector contributes to a broader mosaic of change.
And understanding these nuances is paramount for investors. It's not enough to just look at percentage changes. You have to appreciate the evolving narrative and strategic recalibrations companies are undertaking.
Bringing these discussions together, our expert insights underscore that market volatility is more than just numbers. It's a reflection of our dynamic, interconnected global economy.
From Silicon Valley boardrooms to assembly lines and hospitals, these threads weave together a tapestry of innovation, competition, and resilience. And the lines between traditional sectors are blurring.
Technology permeates everything now. You know, I once joked that trying to predict the market right now is like trying to explain modern art to a goldfish.
Ha, you might get a splash of insight here, a flick of excitement there, but sometimes it's best to just enjoy the show.
Exactly. Whether it's the adrenaline rush from a rallying tech stock or the somber realization your retirement account is doing the tango with inflation, there's never a dull moment.
So as we bring our conversation to a close, let's recap some of today's key themes.
First, the U.S. market showed a mixed bag, slight gains and moderate dips, reminding us there's a whirlwind of activity beneath the surface.
Second, major corporate stories showcase transformative trends: Microsoft's AI, Pfizer's oncology race, Tesla's cost cuts, the GOP tax bill analysis.
And third, our sector analysis emphasized understanding the interconnections between diverse sectors like tech, energy, and finance, all against that backdrop of global economic interdependence.
These stories are more than just news briefs. They're hints at where the market might be headed next. What does Microsoft's AI push mean for competitors? Will emerging market trends reverse as predicted?
And in a world where even giants like Tesla and Pfizer are recalibrating, how much longer before old ways give way to a new, tech-driven paradigm?
Those are questions worth pondering, and they underscore the dynamic nature of the environment we're in. As investors, the onus is on us to remain curious, informed, and ready to adapt.
It's not just about chasing wins. It's about understanding the stories, recognizing the patterns, and sometimes simply enjoying the unpredictable ride.
Before we wrap up, let's touch briefly on global market implications again.
Good idea. The ripple effects of these domestic trends are definitely felt internationally. As tech giants expand AI and cloud services, markets globally are watching to see how this spurs a new wave of globalization in technology.
And healthcare investments like Pfizer's could reshape not only U.S. treatment paradigms, but also international standards for medical breakthroughs.
Acquisitions like Textainers remind us that capitalism remains a global affair. Strategic decisions in one region can reverberate around the world.
Plus, we're seeing greater interplay between domestic policy shifts and international market behavior. That GOP tax bill discussion, for instance, isn't isolated. Its implications can influence investor sentiment globally.
And activist moves like at Victoria's Secret send signals to multinational stakeholders about maintaining stable, long-term vision, even under short-term pressure.
Reflecting on all this, it's clear the market, with its highs and lows, remains a fascinating arena where strategy, innovation, and sometimes unpredictable events create this complex, yet rewarding, puzzle.
Predicting every twist is a tall order, but remaining engaged and informed is our best strategy for navigating these turbulent times.
Absolutely. Before we sign off, how about we pose a few questions for our thoughtful listeners?
Great idea. How do you see the future of AI shaping traditional industries? Could recent aggressive moves by companies like Pfizer signal a new era in competitive healthcare innovation?
And what might the global ripple effects look like if emerging markets, now the darlings of investors, potentially face a reversal of fortune?
These are questions we encourage you to mull over as you chart your own path in this intricate market landscape.
And remember, you can always ask questions to our AI copilot. Our goal is to keep you equipped with the insights you need to make informed decisions.
Whether you're a seasoned investor or just starting, learning never truly stops, and neither do the opportunities for growth and discovery.
As we draw today's briefing to a close, let's quickly recap the key takeaways.
Market displaying a steady mix, hinting that while there's volatility, underlying themes of innovation, fiscal prudence, and sector shifts are crucial.
From Microsoft's AI to Pfizer's move, Tesla's focus, and strategic acquisitions, the multifaceted landscape calls for keen analysis and dynamic responses.
And let's not forget the global implications. Local moves are often the opening notes in a broader symphony of international economic shifts.
With that, I want to extend a big thank you to all our listeners. And a special shout out to PantheonAI, your information co-pilot in these ever-evolving market conditions.
As you get ready for tomorrow's episode, take a moment to reflect on today's insights. Ask yourself, how can I position my portfolio for not merely today's conditions, but tomorrow's opportunities?
Are you ready to embrace the blend of technology, innovation, and evolving global conditions the market is throwing our way?
We hope you found our conversation both enlightening and engaging. We encourage you to come back tomorrow for more exploration, innovation, and, of course, a few more moments of lighthearted humor in the face of high-stakes finance.
Remember, you're not alone in this. Our community is here to help navigate the complexities, just as our AI copilot is always ready to answer your burning questions.
And in closing, let me leave you with one final thought. Learning shouldn't feel like a full-time job. Stay curious, stay informed, and until next time, keep your minds sharp and your investments strategic.
Well said. Thank you for joining us today on PantheonAI's Morning Briefing. PantheonAI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.